This show is produced by the Hartman Media Company. For more information and links to all our great podcasts, visit hartmanmedia.com.
Welcome to the American Monetary Association's podcast, where we explore how monetary policy impacts the real lives of real people and the action steps necessary to preserve wealth and enhance one's lifestyle.
It is my pleasure to welcome Charles Goyette back to the show. He is a returning guest. He's a New York Times best-selling author, a award-winning talk show host, author of The Dollar Meltdown and The Last Gold Rush Ever. He's into the same things I'm into, and most of you are into, and that is peace, prosperity, and liberty, and sound money. Charles, welcome back. How are you?
Jason, it's always great to talk to you, but it's especially great to talk to you now because so much stuff is hitting the fan all at once.
Yeah,
so it's
it
good
sure
to be
is. It sure is. Everything is changing so quickly. We are into Trump 2.0, and he is making huge changes. He is a disruptor, and I'm excited about some of the changes. What do you think?
I share your excitement. There's a lot of stuff, the wokeness, the diversity, equity, inclusion stuff. We need a meritocracy in this country so badly. We've been slipping year after year after year. And so he's going to get merit selection and so on back on the fast track. I love that. I love that.
Yeah.
I tell you the other side of the coin, and I hate to criticize anything that Trump does because the alternative over the past few years has been so bad. And I've never told anybody this. I might as well mention it on your show.
Okay.
A very long time ago, I anchored the news on the Armed Forces Television Network, the network in Panama in the Canal Zone. And afterwards, I fought tremendously with other people, hooked up with a lot of people to stop the giveaway. Actually, it was worse than a giveaway. It was a payaway. We paid them to take the canal. We paid Panama to take our canal. And I fought that with everything I had for a very long time, and we lost that battle. But I have to tell you now, I'm not happy with the bluster and the threatening and stuff that's going on with Panama, Colombia, Mexico. I mean, we don't want a block of people south of our border, unhappy with us. Send their criminals back, send the people back, yada, yada, yada. The idea that we could take the Panama Canal back right now, I think it's absolutely wrong-headed. And so I'm not happy about that. I'm not happy about the tariffs. That's my point of view.
Okay, good. Well, that gives us a lot to talk about. So, Charles, first off, I always wonder if Trump is in some ways using his old strategy with the media. He's definitely an expert at playing the media, and he says these outlandish things. The old Trump got in these dumb little fights that just seem dumb, right? Like he seems to have grown out of that a little bit, which I'm happy to see. But maybe those are distraction methods, right? He does that. He wags the dog very well. I mean, the Democrats do that too. Everybody does it. We all saw the old movie Wag, which, by the way, folks, if you haven't seen the movie, it's about 30 years old now, Wag the Dog. You must see that movie so you understand the way your whole stream of consciousness is being manipulated by the media and the government. It's crazy.
So true.
Yeah.
It's so true. No, you're right, Jason. And I know he does play this game, and he's a good negotiator. Everybody knows the thing about when he wrote his book, The Art of Negotiation. I think it was Larry King said, "Well, tell me what you mean."
Yeah.
And he said, "Well, like this, Larry. Come on. I come on your show, and I sit next to you, and I go, Larry, your breath stinks. You have really bad breath. Do you mind if I sit back? Have other people told you about that? Have you had that checked out? Your breath's really bad." And Trump says, I enjoy putting people, there's nothing wrong with your breath, but I just enjoy putting people on edge, and it gives me a negotiating advantage. So you're right. He does that stuff all the time. Ron Paul told me something a long time ago. He said, "I'm afraid at the time that America really needs friends around the world, we're going to have alienated so many people. I mean, we've got a massive amount of debt to fund. And we're going to need people around the world buying it." I don't think it does us a lot of good to make too many enemies at once. Maybe we can just pick and choose.
Yeah. Well, the way I look at it, if you're doing things in the world, you're going to make some enemies, but let's make them purposeful enemies. I mean, if we're going to make an enemy, let's get something out of it, right? Let's not just make enemies for enemy's sake, right? That's not smart. So I agree with you there. Talk to us about the tariffs. I know that the libertarian ideal is free trade, no tariffs, but I just wonder if that really practically works. There's definitely a difference between philosophy and practicality in the world. And I remember 24 years ago, maybe, having this debate with Leonard Peikoff, the sole heir to Ayn Rand's estate. I met him on a Forbes investor cruise. I met him in Helsinki, Finland. We were talking about this, and I had read one of his books or one of the Ayn Rand Foundation's books or something on free trade, right? And how they were against the tariffs and so forth. But that was a different world when those philosophies were developed. It's just not the same world now. And if you go back to this, like this old biblical concept of being equally yoked, right? The people in the deal are not equally yoked. The Chinese and other countries, they don't have the regulations we do. If you're going to make the playing field somewhat level, it does seem like charging admission to the biggest consumer market in the world is kind of a reasonable idea to me. I mean, Pat Buchanan thinks it's a reasonable idea. He was on my show talking about it. Yeah. Tell us why you're anti-tariff.
Okay, well, there are two things. And one, nobody talks about that. I'll save that for a second. But the first thing is, and we're already beginning to see it, the first thing is retaliation. I have a chapter in my book, The Last Gold Rush Ever, about how currency wars and trade wars get underway. Here's just one example that occurs to me now. Back during the Smoot-Hawley tariff era of the 30s and stuff, Americans put a huge tariff on olive oil. Now, we didn't produce any olive oil, but, they blunder through these things. Government blunders and bludgeons people and stuff, and they're never really discerning about what they do. So they put a huge tariff on olive oil, and it really made people in Italy that were so dependent on it very, very unhappy. So what happened next? Yeah. American cars in Italy started getting their windshields smashed. At the same time, American auto manufacturers needed to be selling more cars, not less, around the world. Italy put a blockade on American cars coming in. So these trade wars can really escalate. And already, as you know, people in Canada and Mexico were talking about their retaliatory capability. And it's true, their exports and their GDP are minor compared to our needs and stuff. But everybody has a little, comparative advantage that they can do something with. But that's one. Here's something, Jason, I think nobody talks about, and it's very important because, we could go on in the endless debate, I think, about, whether producers pay the tariff or American consumers pay the tariff, whether it's a tax on Americans.
I think they both
I think there's a spectrum there. Sometimes the producers can eat some of it, sometimes the consumers. But one thing that it really does that nobody talks about is it provides cover for American producers to raise their prices. Yeah. In other words, the tariff level is here. They've been selling for here, but now they know they can go here and keep their market share. So that's very dangerous, and that is highly inflationary.
Well, I do agree with you that tariffs are inflationary. I mean, I don't think anyone could disagree with that. But the idea of a tariff is to protect or grow the American job market. And so what you didn't say there is that, at least in theory, and I think in practice, more manufacturing is done in the U.S. and more high-paying American jobs are created. I mean, I don't really care if we have inflation or not, as long as wages keep up with inflation, right? It's all just numbers, right? If minimum wage is $100 an hour, and that's going to be inflationary for sure.
But Jason, you do care if your savings are denominated in dollars.
Oh, no question about it. Yeah, well,
it's not just current income that matters; it's what you put aside too.
Absolutely. Well, I should have said wages and investment returns keeping pace with inflation.
Yeah. Well, this is an age-old debate, and I don't think anybody will ever win, and I love to participate in it. But I think we'll find that it's inflationary and the retaliation is getting underway. And I think instead of picking and choosing enemies discerningly or places to push our advantage, we ought to do so sparingly, reluctantly, if at all. So, but anyway, I think we're seeing kind of a blunderbuss effect. You got, Canada, Mexico, China. It's going to be the European Union. We're going to get them next. And so, well, get the popcorn. What a show.
Yeah, these are definitely trade wars. I think the better plan, I do like the idea of getting rid of the Internal Revenue Service and trading that for the External Revenue Service, right? And he's alluded to that.
Love to do that.
The ERS is better than the IRS, but you can't raise that much money through tariffs. I mean, the government's taking in almost $5 trillion a year, and you just can't get that much from the tariff regime. I mean, you'd have to tariff like the trade would just plummet, right? If we did that, and we'd literally have shortages, I think, in that case. But the better idea, Charles, and I think it's risky because the government would lose a lot of revenue for a time, but it might equalize. The better idea being to make America a very low tax or a tax-free place, and just instead of repelling all of these and making all our trading partners angry, just get them all to come here because we have such a desirable tax code. And
sign me up, Jason.
yeah,
Sign me up. I'm on board.
right.
I've always said the way to compete is to actually compete. In
Yeah.
other words, if you have to use government to protect your market share, you know what American businesses have been doing these last decades. You know that they've been buying back shares. You know that they haven't been innovating like they should. It's been good times for them, high multiples in the stock market, and so on and so forth. But if you want to compete, look, we have the capacity, we have the brain power to make everything better, to make manufacturing better. We watched this in the automobile business back, I guess, in the 70s, where we watched Japan just come in and steal our automotive manufacturing
Yeah.
market because they were building better cars.
Yeah.
They were building better cars, and the Americans were capable of competing and producing better cars, but they were in Fat City and their eyes were closed and they were snoozing through the crisis.
Yeah, but I think a lot of that, I think the unions have a big part in the
Oh,
blame
sure.
for the
Sure.
lack of
Yeah.
competitiveness.
And of
So
course,
there is an example to my prior point of being equally yoked, right?
right.
The Japanese were not equally yoked in that deal in the 70s and the early 80s when they were killing us in the auto business, right?
Well, you'll probably accuse me of being a by the book libertarian then, but
Yeah.
my response to that is, of course, you are right. You are right about the unions, and I think any worker has the right to withhold his work, to withhold his skills from any employer anytime he wishes. But on the other hand, the government has become an adjunct of the unions, and if the workers all want to work out and nobody wants to work, then that's a market phenomenon. But if the government comes in and says you can't break the strike, you can't hire people outside of the strike, you can't do this, then they've interfered in the market. But yeah, I mean, I agree with you. All these things are interrelated, and unions are a part of it for sure.
Yeah, yeah, absolutely. Okay, so could we really have no income taxes? Is that really a real idea that could actually happen?
Well, you made the first point I would make about how much money the tariffs can collect, and I don't think it's adequate.
Yeah.
But to me, it always comes back to spending, and I'm really happy that they're trying to do something with the Department of Government Efficiency. It's kind of confusing to think that the government can be efficient. I don't think that's really appropriate because it's not subject to the same market forces. But I'll tell you, I followed David Stockman on this. He wrote the introduction to my last book, The Last Gold Rush Ever. He's written a lot that's very useful about the Department of Government Efficiency, but you can't get it by just going through line item by line item, and you pick up 15 million here and 20 million there. You got to start cutting to the bone, and nobody's going to want to do that. Nobody's going to want to do that. And so representatives in Congress, senators, all are going to have, you see what trouble we're having getting people like Tulsi Gabbard or Robert Kennedy confirmed. Wait till we start trying to slash serious spending. I mean, there's scream to high heaven because it means workers in their district, manufacturers in their district, so on and so forth. So that to me is the solution to everything. And if the government won't do it, but with foresight, it's going to happen some way or another eventually. And it may not be next year or the year after or before the end of Trump's term, but something's going to happen to government spending. And it probably has to do with the bond market, right?
What do you mean by that? Tell us.
Well, at some point, America won't cut back its spending. It doesn't make an effort a serious effort to balance its budget. Then who's going to want to buy American debt?
Well,
America's going to have to offer higher and higher rates to get people to fund their debt.
sure.
And as you know so well, the Fed's tried since, I guess, September to kind of talk rates down, push rates down, and so on. And the market has reacted perversely, and rates have gone back up. So it's the kind of thing that can kill an economy.
Well, haven't we been hearing that for decades, though? I mean,
Sure.
certainly Peter Schiff, the doom and gloomer himself,
Sure.
has been saying that forever, that the other countries are going to stop buying our T-bills, and they just don't. They just keep doing it. I mean,
Well, for now, yeah. But, it's not entirely so in my view. Give you the example of China held $1.4 trillion of U.S. government instruments. It's down in the high 800 billion now, down from 1.3 or 1.4 trillion. So they're gradually disinvesting. And it's slow motion to people outside of my business, that watch this. They think, that things are happening very, very gradually. For me, with a close up microscopic look at prices of gold and, where it's going around the world and so on and so forth, it seems to me it's happening very, very fast. I mean, central banks were disinvestors of gold during most of my lifetime, and now that's reversed.
Okay, so let's talk about some predictions as to
Okay.
where we're going with this new administration, with everything changing so quickly. I mean, what is this year going to look like economically? Are we going to avert a recession, do you think? There's just so much going on. It's really hard to figure out right now, at least for me. There's talk about ending the Fed, going around the Fed because Powell won't cooperate with Trump. I mean, this is like, where are we going? I mean,
It's kind of an in-game scenario. And when I say in-game, it doesn't mean, doomsday and the dinosaurs are going to rule the earth again or something like that. Kind of an in-game scenario. The Fed is in an awful bind. They know that there's a recession in, peaking on the back burner. Yet they've tried to lower rates gently, but they know if they lower rates that inflation will return. Already the CPI is up in September, October, November, December. The producer price index up, up, up. So there's a reinflation already underway, in my view. So, what are they going to do? They cut rates and then get blamed for reinflation, yeah? Or
Yep.
they raise rates. It hasn't really worked, but that makes certain that a recession takes place. And so they've got Trump yelling at him in one ear, he's the king of debt. And, we know that the Trump administration and the new Treasury Secretary, we know that they're in favor of a cheaper dollar. They're basically in favor of somehow artificially lowering interest rates. And that's perhaps to stave off a recession, but rising interest rates are killing us with the compounding of interest costs on our national debt. So everybody's between a rock and a hard place. There is no way out. This is to me, Jason, this is to me like the Saturday morning hangover. What's the cure for a Saturday morning hangover? Can I try it? Yeah, try that. Sure, try this, try that. But the cure is Friday night, not to drink so much, right?
Yeah, but we're already there. We passed
We're
Friday.
already there.
Yeah.
We're already there.
Yeah. Well, there are some pretty positive signs also out there. Technology could save us, right?
Yeah.
The AI revolution. I mean, this could be widely distributed increases in prosperity that are pretty darn amazing. No one could deny that. Maybe that's just where the prosperity comes from. I've always said, Charles, that what is going on in the world, and I've been saying this for 21 years, it's like, think of a boxing match, right? And in one corner, the fighter is bad fiscal and monetary policy. And that fighter is upward pressure on inflation, right? And in the other corner is technology, and that's deflationary, right? Because it just makes things better and makes them cheaper and faster and everything, right? And so the bell rings, those two go into the match, and who wins, right? Does technology win, the deflationary pressure of technology, or the inflationary pressure of this irresponsible spending and, fiscal and monetary policy?
It's a great analogy. It's like Godzilla and King Kong or something going at it. All I know is that when those wars take place, it's us, the regular people in America, that get stomped. As these guys are fighting out. Look, I'm all in favor of the technology. I agree with you. It can be really liberating, but it requires a period of time to get a little equilibrium when those things happen. I noticed, for example, in an area not too far from me, I've watched them building houses in a new subdivision there. Suddenly, just in the last week, all of their workforce has disappeared. There's nobody out there hammering anymore.
Are you saying that those are illegals that are running from the job because they're afraid of getting deported?
They're in hiding. Yeah, they're basically in hiding. Yeah. So this hurts. This hurts the home builder.
That's inflationary.
Oh yeah, that's inflation.
Yeah. Let me just comment on that a little bit. So,
please.
In terms of real estate, which, the vast majority of our audience are real estate investors, so they really want to know what's going on. I mean, look, if we have massive deportations, that's going to put massive upward pressure on construction costs because those are so heavy in the service industry, the construction
as are tariffs on lumber.
Of course, yeah, the tariffs and the deportations are hugely inflationary for real estate prices. Yep. The average construction worker is almost 50 years old now, okay? How many millennials and Gen Zers do you know that are saying, hey, I'm going to get into construction? Nobody, right? Nobody's going into that field. So there's a massive labor shortage that isn't anywhere close to being solved through technology
Well,
Yeah,
how do you
maybe
square that
ultimately.
with deportation policies then?
Yeah.
What do? You got to have a legal worker program for immigrants.
Yeah.
Isn't that right? You
Yeah,
have a
well,
legal
we've done that
program
in the
like we used to have the
past.
Bracero program. Yeah.
Yeah, exactly. Like that was in the 50s, I think. And,
We have
we
60s,
invited,
50s, 60s. Yeah.
yeah, a bunch
Yeah.
of agricultural workers in from
Sure.
Mexico, but they actually had to go home. And
Right.
they
And they
weren't in,
liked it.
yeah, yeah,
Jason, they liked it. They'd
sure.
come work the season in the fields. They go home, take their money with them, and
Yeah.
they enjoyed it.
No,
It was a
that
very
was a good deal. But now we've just enticed them to stay and steal with all of our welfare programs, right?
hmm
And so
yeah.
if we remove that incentive, they'll be more likely to go home.
Artificial intelligence is deflationary. I
Yeah.
mean, look at all the fast food workers and stuff that lose their jobs when you order. And I see this happening. I'm, reluctant to use it. I want to go to the counter and speak to somebody and tell them what I want. Now you go in, you punch in your order, you go to Panera or whoever, you punch in your order, you barely see a human being.
Yeah.
So that's deflationary, but that's coming down the track faster and faster with each passing day.
Oh, yeah.
That's
No
going to
question
leave a
about it.
lot of people.
Well,
Pardon
a
me?
lot of that is thanks to the upward pressure on minimum wages. When
Yep.
minimum wages go up, employers look for other answers, and
Yep.
one is obviously technology.
Minimum wages are like tariffs, they're price fixing.
Yeah.
The government comes in and fixes the price artificially, it dislocates everything, and it makes people look for alternative sources and means of producing. Yeah.
Yeah, yeah. So your thoughts on, what are we going to see inflation-wise over the next year or two? Real estate prices, stock market, whatever.
Well, we had our long secular trend of declining interest rates, that started in the early 80s, and I believe it is definitively reversed now. So I'm afraid we're going to see substantially higher interest rates, and nothing that the state can really do about it except continue to devalue the dollar. And they know that. That's why Bassat and Trump want to devalue the dollar. So I think we're going into a huge currency war.
Hmm.
I wrote about that in my book, The Last Gold Rush Ever, that, debt is always behind gold prices, and debt is always behind, the money manipulators like the Fed and stuff. They do it, to cover debt or provide spending power to Congress that's not taxed and so on. And we've got all these other things, Jason, converging right now that, are the kinds of things that drive gold prices up. And that is, certainly a currency war. You got a war on cash. You have, the ending of the old American global military empire. It's clearly ending now. It cannot be sustained, and the world is revolting against it. And so the end of the empire, banana republic economics everywhere. I've never recommended to anybody, at least since the late 70s, I've never recommended to anybody gold and silver stocks because, I'm kind of a fundamentalist. And I think, well, everybody should have some gold and everybody should have some silver. It's for spending, it just makes sense to have some wealth off the grid, in
Yeah.
case, there's an event and the ATMs quit spitting out cash or whatever. It just makes sense to have get some stuff off the grid, protect your financial privacy as well to a certain extent. It's always important. But I think things are going to be so dynamic here over the next 2 years that I've even actually publicly told people that, despite the fact that they've been languishing and doing nothing, this would be a good time to dip your toe in that water. And I've told one of my friends that,
Meaning dip your toe and get some metals.
well, I'm talking about actually some shares, some gold and silver shares.
Oh, okay, okay. Now, why do you prefer that
Tremendously
over the
depressed.
actual metals? See, I
No,
think,
I do not prefer it.
if you're going to invest in gold and silver, I just think you got to have the physical metal in your hand,
Course. And that's all I've ever done all my life is tell
Yeah.
people that. But right now, I think, you have a legitimate interest in making up for the money that the government has stolen from you over the last couple of years with 40-year record high inflation. And here's a good way that you might try to make some of that back.
Yeah.
So,
But gold and silver have been pretty boring until recently. I mean,
yeah.
they just don't do much. So I have to ask you about the new kid in town, and that is, of course, crypto, but especially Bitcoin. Are you a fan, or are you sort of old school on that, where you'd say it's like Warren Buffett, or it's rat poison, or Charlie
I'm, a,
Munger?
I'm,
Charlie Munger might
I'm,
have
a,
said that.
I'm, yeah, I'm a little bit of a fan and a little bit reserved about it. I feel like a great economist once said, let all the currencies compete and let the best ones survive. So I'm happy that people are, testing cryptos with their money, not mine. They go out and test them. And, the ones that work survive, and the ones that people like, that Bitcoin, thrive and so on. I'm all in favor of that. But I think, currency should be allowed to compete. The president the other day said, we're going to show the BRICS a thing or two, and any country that joins the BRICS and wants to get rid of the dollar reserve standard is going to get 100% tariff. And so I posted on my X account that you don't have to bludgeon or threaten people to use a good, honest, reliable currency. You don't have to say, we're going to pound you into the dirt with tariffs. We're going to do this to you. We're going to do that to you. All you have to do is make your currency honest and reliable.
Yeah, but how would you do that? It's so far gone. Trump can't make the dollar an honest thing all of a sudden.
Well, then you better buy some gold, shouldn't you?
Yeah, but that'll still have the BRICS trading outside of the dollar.
Yeah.
It doesn't solve his problem.
Yeah, it doesn't solve his problem, but it solves your problem.
Yeah, on an individual level, but if the BRICS turn in, I don't think the BRICS are really a threat. I think the BRICS can't even get along with each other. Okay, so I don't think it's a big deal. But to whatever extent they do nibble around the edges of dollar supremacy, okay, which they are, and that'll probably grow a little bit. Should the U.S. just stand by and let it happen? I mean, I agree that it's not like fair what we've done with the dollar and this, the Bretton Woods system. We've abused it, okay? Ever since 71 for sure. But what are we to do now? I mean, are we just going to let it go?
What are they to do now? I don't think that the BRICS are individually like their primary objective is to take down the dollar. We want to take down they want to protect themselves.
Yeah.
Nobody knows the money printing, the fiat money game like central bankers.
Sure.
And they don't mind fleecing their own people in their own countries around the world with their own money printing exercises. They just don't want to be fleeced too badly by ours. And so that's what's responsible for this slow motion de-dollarization that's going on. But I think that'll accelerate. If we are seeing reinflation now, which certainly looks self-evident, if we're seeing reinflation now, then that trend's going to accelerate. I don't think it's warfare. I don't think that the BRICS are saying, we're going to take down the United States. The individual central bankers are saying, let's protect our reserves.
Yeah, I get it. One of the things you said earlier is you were talking about how Trump wants a weak dollar. And obviously the purpose of that is to increase American exports and have America compete better in the trading market. But that's also very inflationary for Americans.
Absolutely.
So where do you see the dollar headed over the next decade? I mean, in one of the examples, Charles, that I teach people about my trademark strategy called inflation-induced debt destruction. Okay.
Okay.
And in the example I give a typical homeowner buying the median price home in 1972. And from 1972 to 1984, in 12 short years, the dollar went from $1 to 40 cents. And that's only by the official CPI numbers, which we know are understated, right? But they weren't as badly understated back then, I don't think. They've become more manipulated over time.
Like they are today, yeah.
Yeah, of course. So a dollar went from $1 to 40 cents. I mean, it was only worth 40 cents 12 years later. Where's the dollar going over the next decade?
Well, I have a very difficult time, Jason, even though I've been in the communications business all my life, too. I have a very difficult time communicating with people like this because I get outraged when I pick up the newspaper or I turn on the business news channel, Bubble Vision or something, and they say the dollar was up today. Well, they don't tell the average viewer what that means. To me, when somebody says the dollar is strong, and they say it the dollar is stronger today, the dollar is strong, means that you can buy more stuff with it.
Right.
But the truth is, all the currencies are losing purchasing power, but they're losing them at different rates. So if you say,
it's a race to the bottom, we know that.
Yeah, it's a race to the bottom. And if you say, the dollar is up, you're just saying, the Titanic's going down at 11 degrees and the dollar's going down at 9 degrees. So jump on the dollar deck.
Right.
It doesn't make any sense. So I don't think the dollar is strong. If it fares well compared to other currencies that are also losing value, it's not encouraging to me. I'm a dollar bear in terms of purchasing power, and I don't participate in this public hokum that, the dollar's way up, the dollar's mighty strong. We want a strong dollar that buys you less stuff. Are you kidding me?
Okay, so next 10 years, how does it look? I mean, I'd say it's worth a lot less than it is today. I think you would agree.
I totally agree with you. I totally agree it's going to work. There's no way for them to fund the debt without depreciating the dollar. And that's what Basant knows, and I think probably knows it to some degree. They've got a huge problem. But as they devalue the dollar, they've got to, as I say, raise rates to entice people to buy their bonds. So the bond guys are, in the pits know what's going on. It used to be, they could sell a bond for 3% and the inflation rate was 2% and everything's fine. This is starting to change now.
Yeah. So weaker dollar, more inflation, higher interest rates.
Yeah. But it's the witch's brew of things that you don't want. The
Yeah.
dollar that doesn't buy as much stuff, interest rates that go up to fund the insurmountable debt, a lot of desperation to get people. And we've seen this kind of thing in other countries. When a government gets in trouble, they come up with all kinds of very novel ways to get people to fund their debt. So they say, for you to be a government approved investment fund or something, or a chartered bank with government guarantees, depositor guarantees, you have to place so much of your assets
Yeah.
in U.S. government bonds.
Right.
And they do that all the time. Insurance companies are sitting ducks for that. Banks are sitting ducks for that sort of thing. But they become very creative when they get desperate to borrow more and more money.
Yeah, right. No question about it. No question about it. It's really interesting, and we'll see where it all goes. And the other thing that could happen on top of that, and during COVID, I was predicting stagflation. If technology displaces a lot of jobs at the same time that those things are happening, that's a recipe for a high misery index where we see prices going up, unemployment high. We see asset prices going up. Real estate's getting more and more expensive, even though activity is declining. Like that's what we've been in for the past few years now. And everybody thought the real estate prices would crash. And I differed with that all along. I said, no, they're not going to crash. There's just not enough supply.
Yeah. And where else are you going to put your wealth if you don't have some real estate?
Yeah.
Well, one other thing that's going on that concerns me too is that, listen, I'm all for, let's triage the illegal alien situation, get rid of the criminals, the drug dealers, so on, get rid of them first to get this thing moving, and then changing our sights depending on what's necessary. And I'm not an expert on the costs of things like Social Security, but I can tell you it's been kind of a free ride for us to have a lot of people that are here illegally having Social Security deducted from their pay, but not being necessarily. Well, the Biden administration and these guys want everybody in the world to be a recipient of American Social Security. But to the extent that they're here under false pretenses, right, then they pay in, with Social Security is withheld, and all of a sudden, all the withholding of the illegal aliens that wasn't destined for certain to go back to them, now is a shortfall in the Social Security system. So it's just we're really in a very difficult period.
We've gotten ourselves into quite a mess, and I say the future is inflationary. So own assets that are commodities that have intrinsic value, like real estate, the ingredients of real estate, and finance them with 30-year fixed debt because the debt just keeps getting debased by inflation, just like saving stocks, bonds, and it's really amazing. What else would you like to share with people, Charles, that, maybe a question I didn't ask you before we wrapped up?
Well, I think probably the most important thing is to understand that this is a common variety financial crisis. Those come along every few years, and interest rates move up and down and the debt grows or the debt shrinks. But this is a tectonic shift in the global economy. We have real competitors now that we didn't have. We have manufacturing that is much of which has been moved. We have a cost-free way of doing something about it. And the Trump people seem to know something about this. But if you could slash regulation on the American businessman, if you could slash regulation on builders, this
well, and that's what's
fire,
happening. That
yeah, but
happening.
I mean slash it. You're not going to get Congress to go along with cutting $2 trillion in spending, but you could get a lot of mileage. We're watching this terrible fire in the Pacific Palisades over the last couple of weeks. I have friends that lost their homes there and stuff. We're all wondering about how the government is going to impede their return to their homes and their ability to rebuild their homes and so on. Just by analogy, if you get the government out of the way, the American workers and the American business people can really rule, and they can really compete, and they can really use new technologies, and they're very, very capable. But we've got, what's happened to the Federal Register. It was a little book like that 40 years ago, and then it's like that. And now it's like this, and now it's like a 5 feet
it's just
bookshelf. It's insane.
It is.
It's insane. So I'd like to see them attack it on that front vigorously, because then the only people that get hurt are the people that, spend their life writing the rules.
Mm-hmm. Yeah. Well, if we do nothing else, let's please just get term limits for Congress. I mean, God, nobody should be able to spend their whole life in government. That's just a leech. I mean, it's an obvious leech. And the longer they're there, the more backdoor deals they make with pharma companies and everybody else. I mean, it's just...
You're so right. And I watch these hearings for Tulsi and
I know.
RFK and stuff, and these people are shrieking and screaming. It's like, can't you?
Because they don't want to give up their gravy train.
Yeah, they don't want to get, and I look at Elizabeth Warren shrieking like that, and I think, would Thomas Jefferson or John Adams have behaved like that?
No.
No. So we don't have the quality, I think, the caliber of people that we should have, and conversations in lawmaking ought to be like your conversations on your podcast. People that have different points of view come together, they talk them out, they talk about their advantages of their argument and the disadvantages. That's how government should work, if it works at all.
Yeah, of course it does. Well, let's just make it smaller. That'll help.
Yep, that will help enormously.
Charles, give out any social media or website you'd like to share with people.
Well, I've been away from Twitter for a very long time, and I had a huge following, and since COVID, I kind of took myself out of being in public and stuff. And so now I've reinstituted my Twitter account. That's probably the best place. So
now on X. Yeah.
X. And it's at Charles Goyette. And I write for private clients. And I've worked a structure that I can start sharing some of the information I share with them on my Twitter account. So I've got a lot of new content coming in. I think it'll be pretty important.
Good stuff. Yeah. Well, Charles Goyette, thank you so much for joining us.
Jason, it's so great to talk to you again, especially since it's been so long.
I know. Let's make it more regular.
Let's do that. Anyway, good to talk to you.
Thanks, Charles.
Thanks, Jason.
Thank you so much for listening. Please be sure to subscribe so that you don't miss any episodes. Be sure to check out the show's specific website and our general website, hartmanmedia.com, for appropriate disclaimers and terms of service. Remember that guest opinions are their own, and if you require specific legal or tax advice or advice in any other specialized area, please consult an appropriate professional. And we also very much appreciate you reviewing the show. Please go to iTunes or Stitcher Radio or whatever platform you're using and write a review for the show. We would very much appreciate that. And be sure to make it official and subscribe so you do not miss any episodes. We look forward to seeing you on the next episode.